You can't miss the headlines. GTA home prices are dropping, listings are flooding in the market, and sellers are facing a situation they haven't seen in years. There is a lot of fear out there. But what if I told you that this anxiety is actually creating a massive, once in a decade opportunity for a specific group of homeowners? While most people are worried about the drop, smart upsizers are seeing this as their moment to climb the property ladder in a way that just wasn't possible 18 months ago. In this video, I'm digging into the numbers to show you exactly why 2025 is the year of the strategic upsize. Before we jump into the opportunity, we need to understand what's really going on. It's easy to get swept up in the dramatic headlines. So let's cut through the noise and look at the hard numbers. The latest data from July 2025 shows the benchmark home price in the GTA fell by 5.4% compared to the last year. The average selling price is now sitting around $1.5 million, noticeable dip from where we were. Now, a drop of 5.4% isn't a market crash, but it's a clear signal that things have shifted. What's even more telling is the story of supply and demand. Active listings, the sheer number of homes for sale, have exploded. We've seen jumps anywhere from 16% to over 26% compared to last year, depending on the area. The July active listings across the GTA climbed to over 30,000. At the same time, sales just aren't keeping up with this flood of new inventory. This imbalance has pushed the days on market up to 41 days, a big jump from 36 days just a year ago. Homes are simply taking longer to sell. This is the source of all that seller anxiety. When buyers have more choices, they feel less pressure. They can take their time, they can negotiate, and they are no longer driven by that frantic fear of missing out that defined the market for so long. This is a buyer-leaning market, a fundamental change from the seller's market we are all used to. So the logical next question is, why is this happening? It really boils down to two things working together to cool the market: stubbornly high interest rates and that mountain of inventory we just talked about. First, let's talk about interest rates. The Bank of Canada has started to make small cuts from the peak, but borrowing costs are still way higher than they were during the pandemic. The next rate announcement is on September 17th. While many economists think we'll see more small cuts eventually, nobody is expecting a return to the rock bottom rates that fueled the last boom. For this upcoming announcement, most market watchers are expecting the Bank of Canada to hold its rate at 4.25%. These higher rates put a cap on the market by hitting affordability hard. Higher rates mean higher monthly mortgage payments, which shrinks the pool of buyers and cuts down how much they can borrow. This affordability crunch is a major hurdle, especially for people trying to get into the market or move up to a bigger home. Second, this brings us back to inventory. With fewer buyers in a rush, homes are sitting on the market longer. This creates a feedback loop. More listings sit, inventory piles up, and new sellers find themselves competing with a ton of other properties. This environment gives buyers negotiating power they haven't had in years. Sellers can't just name their price and expect a bidding war anymore. There is a huge gap between what sellers want, often a price based on the 2022 peak, and what buyers are actually able and willing to pay today. Until that gap is closed, the market will stay slow. Now, this is where it gets really interesting. The GTA market isn't just one market. It's a collection of smaller markets, all behaving differently. And the biggest split right now is between more affordable starter homes and larger, more expensive properties. Let's start with the higher end of the market. Larger detached homes are feeling the most heat. This is the segment where high borrowing costs hit the hardest. It's just tougher to get a massive mortgage, so demand for these premium homes has cooled off significantly. The average price for a detached home in the GTA dropped to around 1.36 million as of July 2025. Now let's look at the starter home market. Think smaller detached homes, semis, and townhouses. This segment has held up much better because its more accessible price point keeps it in demand. While prices have softened here too, the correction hasn't been as severe in terms of total dollars. This creates a fascinating situation. The dollar value of the home you might want to buy a larger, more expensive house is falling more significantly than the dollar value of the home you might be looking to sell your smaller starter home. This means the price gap between these two types of homes is actually shrinking. And that is what creates this massive opportunity for upsizers. This brings us to the key idea of this video. Why 2025 is a golden opportunity for anyone looking to strategically upsize. For years, the dream of moving from a starter home to a larger detached house felt impossible. The price gap was just too huge. Every time your home's value went up, the price of larger homes seemed to leap even higher. But today, that's been flipping on its head. Let's walk through a hypothetical but very realistic scenario. Imagine you own a smaller starter home. A couple of years ago, at the peak, it might have been worth somewhere around $1.1 million. The larger detached home you were dreaming of was priced at a staggering $1.8 million. The gap you had to cover was $700,000. That's a massive jump. Now, fast forward today, your starter home, being in a more resilient part of the market, has held its value pretty well. And it's now worth around $1.05 million. But that larger detached home, which has hit harder by the correction, has seen its price fall from 1.8 million to maybe 1.6 million. All of a sudden, that gap you need to bridge is no longer 700,000, it's 550. You've effectively saved 150,000 on your upgrade, not by perfectly timing the market, but by understanding the imbalance within it. You're selling a relatively strong asset and buying a discounted one. This is what we call the upsizers arbitrage. And it's not just about the numbers. Your power as a buyer is way up. With more homes to choose from, you aren't forced into a bidding war for a place that isn't quite right. You can see multiple properties, find one that actually fits your family, and make an offer with conditions like financing or an inspection that were nearly impossible to include in a seller's market. Sellers are more willing to negotiate because their property might have been sitting there for over 40 days and they are feeling the pressure. This is how strategic buyers are winning in today's market. They are unemotional, they follow the data, and they use the market's fear to their advantage. This isn't just a theory. To make this abstract idea concrete, let's look at a representative scenario based on what we are seeing in the market. Imagine a family living in a starter home that they had outgrown. They wanted a larger detached home with a backyard for their kids. In late 2024, they were seeing suitable homes in their dream area listed for 1.7 million and felt totally priced out. They kept an eye on the market through the spring and summer of 2025. They noticed one larger home, first listed at 1.65 million, just sitting there. It sat for 30 days, then 60. The sellers were getting nervous. They dropped the price to 1.6 million. Still no serious offers. Finally, after almost 90 days on the market, they dropped it again to 1.575. This was the moment the family was waiting for. Their own starter home, being in a more affordable and in demand bracket, sold quickly and close to their asking price. They turned around and negotiated a purchase price of 1.55 million for the larger home, a full 100,000 of the original list price. The financial jump was now manageable, and they got their dream home for a price that was unthinkable just a year earlier. They played the market shift perfectly. If you're one of those potential upsizers trying to figure out if the math works for your family, this is the kind of strategic conversation we should be having. This isn't about trying to time the absolute bottom of the market. That's a fool's game. It's about understanding the specific dynamics at play right now to make a smart move for your long-term goals. The link to book a personal consultation call with me is in the description below. Let's build your plan. So while the headlines are all about seller anxiety, the full story is a lot more interesting. We are in a market of correction, not a crash. And that correction is creating a powerful once-in-a-decade window for those ready to move up the property ladder. The combination of falling prices for bigger homes, more stability for smaller ones, and a huge boost in negotiating power for buyers has created the best environment for strategic upsizers that we have seen in years. The big question now is, what will the Bank of Canada do with interest rates as we head into 2026? And how will that affect this window of opportunity? Many forecasts suggest the market could begin to stabilize and rebound as the economy improves. Let me know what you think in the comments. Are you seeing the same opportunity in your neighborhood? And if you want to stay ahead of the trends with more data-driven updates on the GTA market, make sure you like this video and subscribe to the channel. Thanks for watching.